gold will reach $5,000, let's say before 2030. But I think gold will be much higher. But let's see when we will reach $3,000, because if gold is at $3,000 per ounce, our average gold-related investment will be up 200-400%. So we will be happy with that. I think gold will witness this revaluation process, and that might take a few years to play out, and then you'll see gold, you might see gold at 8,000, 10,000, or maybe even higher.
Hello and welcome back to Soar Financially, where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financial Group, and of course, your host for this conversation today. As you can tell, probably behind me, I'm still traveling. I'm in Arizona. I've been on a couple site visits here this week, and I'm looking forward to the conversation we have lined up for you today. Because as I said, we discuss the macro to understand the micro, and our guest today, Willem Middelkoop, he's the founder and president over at the Commodity Discovery Fund, is the perfect guest for that thematic, because we're going to figure out, why is gold moving? Why is gold holding up so steadily? The day of recording, we got some GDP numbers and PCE numbers. GDP lower than expected, PCE much higher than expected, and gold is up. So we have to talk about that. What does that mean? Where are things headed? And how about those mining stocks? We got to talk about the performance, maybe lagging behind gold as of right now, still lagging behind. And I'm going to ask Willem why that is, of course. So let me bring my guest on the screen. Willem, it is great to see you. Thank you so much for making the time.
Well, thanks for the invitation. Good to be back.
Absolutely. Yeah, I love having you on, Willem. And as I said, you're the perfect guest to discuss the macro so we can understand the micro, meaning gold and the mining stocks. Let's start. Let's dive right in. I mentioned it in my intro. Gold is holding up very, very strongly despite rising yields, bond yields in the US on the 10-year. Rate cut expectations by the market have been sent back to December, so after the US elections. Why is gold so strong, Willem?
I think the reset process has started. And what do I mean with that? In 2013, I wrote a book. It's called The Big Reset: The War on Gold and the Financial Endgame. And the thesis of this book was that gold will be revalued at some point by market forces or by central bankers, and gold will come back into the monetary system as a monetary asset. And with everything ongoing, we see a new war, you could say, between the West and the rest of the world. We see the BRICS countries, the BRICS alliance, starting to fight the Western dollar system, the paper dollar system. Of course, we know that gold and silver prices were always manipulated through the paper futures COMEX system, LBMA system. And now gold has been moving from west to east in the last 15 years. And I think it's no coincidence that we see many Wall Street executives traveling to Shanghai, and also some important members of the US government traveling to China. And it's no coincidence that the Chinese aren't visiting the US, but all these people from the US are visiting China. So I think some discussions are being done at the highest level, and we all know that the US just can't continue with growing its debt 1 trillion in every 100 days. So people are starting to look at the anti-dollar, and that's gold. And we see massive amounts of trading at the Shanghai Gold Exchange.
No, fantastic intro there, Willem. Lots to follow up on. And of course, you mentioned it as well yourself. Like you've been predicting this for 10 years. Gold has been moving west to east for 15 years. Like, but why has it happened now? Like now we've seen the breakout. Like, can you identify a single trigger, or was it just a culmination of everything that moved gold now to almost $2,400?
Well, if you were watching this space carefully, you could see it coming for the last 10 years. And don't forget, gold was trading just north of $1,000 early 2016. That was the bottom of the whole precious metals and commodity space. And especially after the start of the COVID crisis and then the Ukraine war, the geopolitical situation got very tense. And you could actually say that we're in the very early innings of a hybrid, world war or world conflict. And this is a totally different conflict compared to the 1940s or the First World War. But there is this monumental shift in which over 140 countries tell the US they are fed up with the Western double standards. They are fed up with Western hypocrisy. And now with the conflict in the Middle East added to this, it's a very explosive situation. And many institutional investors will never invest in gold unless there's a threat of war. And I think some prominent sovereign players, central banks, are adding a lot of gold to their reserves. So not only China, not only Russia, but even a country like Poland is growing their national gold reserves 10x.
Why is that? It's like it seems like it's the East that is growing its gold reserves. So just to stay on that topic for a second, but it's just the East. Poland is an exception. I think Ireland bought little bit of gold. It seems like they didn't really either read the memo that the West is not allowed to buy gold, right? Or they didn't fully understand it. I don't know. I'm just making fun here, but like, why is it just the East? Like, why is the West not seeing what is happening, and why are we so hesitant? Is there like a mandate that we're not allowed to buy gold?
Well, if you look at the conflict in Ukraine, where you have the sanctions against Russia, look at the map of the countries applying those sanctions. It's just the West. It's North America, it's Europe, and a few other countries. If you look at the war in Gaza, who is supporting the Palestinians? Who's supporting Israel? It's the same divide. The Western powers are supporting Israel, and all the other 140 countries who are not joining the West in sanctions against Russia are supporting the Palestinians. And most of these 140 countries have China as their main trading partner. Compared to 20 years ago, it was the US. So China's influence has increased quite a bit over the last 10 to 20 years. And when we look at the development of the BRICS alliance and which countries are joining, Saudi Arabia joined, the United Arab Emirates recently joined. So this is also the end of the petrodollar deal, in which the Saudis promised to never sell oil in another currency than the US dollar. So the existence of the dollar as the sole world reserve currency is at risk. And that's why we see these large changes. Don't forget, we saw a breakout of interest rates from a 40-year downtrend, which started in 1980. So it was not a question if gold would break out this sideways pattern of the last 4 years, but only when. And now it has broken out with a powerful move, and much more is to be expected.
Zooming out there, like on the gold price, of course, and we know usually a geopolitical gold price has very short legs. The question now is, like, how sustainable is the gold price at this point, and how geopolitical is that gold price? Let's assume Israel and Iran make up, for example. What would that do to the gold price?
This will not change a bit about the monumental changes in the geopolitical world. So this deglobalization, in which the West is trying to decouple from China, this has just started, and this will have repercussions for decades. So we're just starting in this process, and I'm not surprised that gold is being weaponized by the non-Western countries. In a way, the dollar has been weaponized by the US. So it's just a countermeasure of the non-Western alliance.
Weaponization of gold is actually an interesting topic, Willem. Let's stay on that for a second, because we've talked about, and I've talked about this on this channel about 2-3 years ago, maybe early days here. But gold, when gold breaks out, the US is in trouble, right? And we've talked about that. Like, how deep in trouble is the US now based on that gold price move? Because at $2,400 gold, what does that tell you? Like, how weak is the US dollar despite the Dixie actually staying fairly strong, right?
Well, when we see all these US leaders traveling to China, they must be in real trouble. Otherwise, they would just wait for the Chinese to come to them. But the Chinese aren't buying any new treasuries. They haven't been buying any new treasuries for, let's say, the last 6-7 years. So the US is no longer able to finance their budget deficits by selling treasuries to the normal international clients. So actually, they're changing the rules as we speak to make it possible for US banks to start to invest massively in US treasuries again, and don't have them show up on their balance sheet. So QE will start very soon, and this is what gold is telling you.
Well, just looking at the GDP number we got today, which was way under expectation, I think, is that a sign that, okay, QE is looming? And what could that look like? It can't just be everybody gets like $2,000, or like what QE look like? What are your thoughts there?
I don't know, but I see a budget deficit, I think north of 2 trillion for years to come. So please explain to me how the US can solve this budget deficit without the help of traditional friends like China and all the other countries buying up the treasuries. So the normal off-takers aren't willing to buy the treasuries anymore. So how can you have a situation you don't have QE when you have a budget deficit of 2 trillion for years to come?
That's an interesting topic, the US budget deficit. Like, it seems like nobody's really worrying about it. We're in a US election cycle. I've yet to read a single word about that. Like, yeah, they're talking about tax cuts, but they're not talking about cutting the deficit.
Well, we are worried by it, and I think all these buyers of physical gold are very worried by it. So the fact that the Western mainstream media isn't talking about it and isn't worried doesn't mean the world isn't worried. We can all make calculation. If you've done primary school mathematics, you can do the math and know this can't end well.
Fantastic. No, Willem, I think that's a perfect segue. Also, we need to talk about the mining stocks, right? And
please.
Sort of and you know the question is coming. Well, it's not a surprise, but of course they're lagging behind, and we need to analyze a little bit why that is. We last spoke. You said the mining stocks don't need a trigger, but it seems like they do, because they're not moving. They're lagging behind. Just looking at the GDX, GDXJ, the HUI. On a 12-month performance basis, they're lagging behind gold. They're actually still down on a 12-month basis. You'd assume you actually be up in the money by 10-15%. On a year-to-date basis, yeah, we're up maybe 9% on the GDX, but we're still lagging behind the gold price by about 7 or 8%. But what happened to that trigger, Willem? Do we need a trigger now?
Well, last time we spoke, I think we discussed that we were just waiting for this breakout. It was just a matter of weeks or months. And now we have this breakout from this 4-year sideways pattern, which had a bottom around 1700 and had resistance at 2100. So now we have this powerful breakout, but that has only happened quite recently. And look at silver. Silver stocks are just breaking out for the last 2-3 weeks. And we all know from past cycles that it's first gold breaking out and silver will follow, and then the shares will follow, and especially the smaller junior shares. Sometimes they have a lag of a few months, but our fund is up 20% from the low in the last week of February this year. So the recovery has started, and on average in a recovery year, our fund goes up 70, 80, 90%. So 20% in the first few weeks that's a normal recovery, and you can expect more to come. March was a double-digit return month for our fund, was plus 12%. On a normal recovery year, we have 4, 5, 6 double-digit return months, because most of the recovery still has to play out.
I have to ask you, Willem, because I'm looking at my own investment behavior as well. How willingly are you signing checks these days, meaning or writing checks to companies? Are you still in a holding pattern where it's like, hey, we are positioned, let's wait for this to play out, or are you adding to new positions as well?
Oh yeah, we've done several private placements. We joined several private placements in which we wrote checks of 2, 3, 400K. But we are very selective because we only focus on the tier 1 projects, maybe tier 2 projects. So we built a huge position in Hercules Silver. And the fact that Barrick came in within weeks shows that Barrick thinks this is a potentially world-class project. So we're very selective, and we have a totally different strategy compared to Crescat. Of course, Crescat, just like ourselves, I think we're the largest resource funds who put money into junior mining. But Crescat is investing a lot of money pre-discovery. They hope they can predict what the next discovery will be. We stopped doing that years ago and decided only to invest in the scale-ups and not in the startups. So we wait for a discovery first. And when the discovery is there, we might have missed the first 100 or 200% up, but then we ride it. We only entered Philo mining when it was trading at $8, and then they made the big discovery with the deeper holes and found the deeper zones, and now it's trading around 25. So you don't need to be in at 30 cents. We entered Great Bear Resources when it was trading 170. We missed the first move, but then it ran to $24. So we're happy with a move of 170 to $24. So if it's a real big discovery, it's a real large project, the discovery process till buyout will take years.
What are your gold price assumptions these days, Willem? When you look at a company, for example, and I'm just being triggered because I saw a PA come out from a company this morning, and I'm just curious, what are your long-term assumptions? Because Citi, for example, raised their floor for the gold price to about $2,000, and a long-term target or from 16 to 18-month target of $3,000 gold. So I'm curious, how are you factoring that in? Are you still a bit more conservative? Are you using 1,400, 1,500, or have you moved your price, your floor maybe to a higher level as well?
Well, a 16 to 18 months outlook isn't long-term. Long-term is where will gold be in 2030 or 2035? It has always been my minimum target that gold will reach $5,000, let's say before 2030. But I think gold will be much higher. But let's see when we will reach $3,000, because if gold is at $3,000 per ounce, our average gold-related investment will be up 200, 300, 400%. So we will be happy with that. I think gold will witness this revaluation process, and that might take a few years to play out. And then you'll see gold, you might see gold at 8,000, 10,000, or maybe even higher.
No, I got to be careful not to put that on the thumbnail there, Willem, but it always pulls people
It's on the record.
It's on the record, right?
It's not in the next 12 to 18 months.
Yeah. But my question also was about, when you look at a PA or you do your economic studies on internally at the Commodity Discovery Fund, and you look at it, what is your base assumption price level these days? What are you using to say, okay, this makes sense? When you look at a PA, for example, you say, oh, they've used 2,000 baseline. Oh, that's a bit high, right?
No,
so I'm curious
when I look at the PA and 1,500 is used, then I think a lot of money can be made on a project which will be profitable with 1,500 gold. Many of these studies have been completed in the last few years at record low prices, one could say. And this explains why there's so much upside for many of these shares, and that's why they will go up over 100%, and some will go up over 500%. Look at SolGold, great example. It's one of our main holdings. The whole company is valued at 300 million. This is the largest undeveloped copper gold project in the world. Look what BHP is willing to buy for Anglo American today, 37 billion. SolGold should be trading north of 1 billion. So these valuations are still, look at Reunion Gold. That was a bid for Reunion Gold by G-Min Mining, but that was 0.3 NAV. So this could end up into a bidding war with much higher prices to come. So we see so much value out there, and that's why we're still able to attract money. We have over 100 million euros invested in this market. So let's say that's 130 Canadian dollars. And I expect our assets under management to grow substantially in the next few years because of these re-ratings and the inflow of new money.
We talked extensively about gold the last 20 minutes. We got to look at other commodities. You touched on silver, but I want to talk about copper to a degree as well, because copper has been running. Last I checked, it was about $4.30 per pound, which is astounding, given the macro outlook maybe for the U.S., which is still the main market. So we have to talk about maybe some of the copper outlook, copper price drivers, and also maybe some of the copper stocks. But let's start higher level, copper price. Where do you see it headed, and why has it been so strong lately?
The same for copper. It will be much higher, will go much higher. And how can we know? Because listen to the words of the CEO of Glencore. Glencore is a huge copper trader, copper producer. They're on the record by saying they won't invest in any new copper production before prices are reflecting the copper deficits in the market. So they know prices will go up. Robert Friedland, one of the largest and most famous copper discoverers in this world, and now a copper producer, he tells the world that copper prices need to go much higher. So look at Codelco. It's the Chilean state copper producer. Production is falling off a cliff while we need copper production to increase. There's a copper deficit already, production deficit in the market. Goldman Sachs expect copper shortages to appear. We see several off-takers in South Korea and China complaining about shortages in copper concentrate. So if copper shortages are starting to develop, and the whole world needs this energy revolution and these EVs. In a Tesla, you have 6 times the amount of copper than in a traditional car. So copper will go much higher, and that's why 20-25% of our portfolio is copper related.
Oh, fantastic. Okay, no, I appreciate you clarifying that. I'm curious, like maybe just one more macro question on copper. Would you say, or do you have a sense whether Asia, Southeast Asia, China included, is maybe further advanced in the business cycle? They're further ahead and doing better than maybe the US is doing right now? Are they advanced there?
Well, everybody was afraid about a coming recession worldwide, and especially coming from China, because they have this real estate crisis. But if we look at the last numbers coming from China, I think China is in the process of stocking commodities. And this goes for gold, copper, oil. Many commodities are being stocked. I think the government has an approach in which they tell their main partners, banks, companies, to import much more commodities than will be needed in the next 12 months. I think China is afraid for a even worse crisis with the US, which could lead to naval blockades or whatever. So don't forget that commodities, as Zoltan Pozsar, who's a famous analyst who was with Credit Suisse, he wrote it 2 years ago. There's a new monetary system coming from the East, and that will be built around commodity-based currencies. So we shouldn't forget that if you analyze these markets with the knowledge of the past, you will make a mistake because the whole world is changing rapidly.
That's a good point, Willem, because I want to talk a little bit about competition for our space, the commodity space, the mining space. And you can sense where I'm hinting at Bitcoin, obviously, and digital currencies in general. How does that factor in? Like, we're seeing not enough money flow into our sector right now. Gold is rallying, but it's still not it's still being outpaced by Bitcoin to a degree. So I'm curious, like, how much competition do you see there, and how much of a factor in the new world order is Bitcoin or digital currencies here?
Well, the last time I looked at the numbers of all central banks worldwide, I couldn't find one who was adding Bitcoin to their reserves. I couldn't find dozens of central banks adding gold to their reserves. So that gives you the answer.
No, okay, that makes a lot of sense, because it's still, like, we had the halving recently, so I'm not a Bitcoin expert, so you might have sensed that just based on the questions I'm asking here. But what does that mean? Like, what is the Bitcoin halving? Like, how interesting is Bitcoin still? And do you see that being implemented? I'm just curious because I want to figure out, like, the flow of funds, because I've heard commentary that Bitcoin and digital currencies are just taken away from the mining investments, right?
I like Bitcoin myself. I even coined it digital gold in 2014 in one of my books. So that was 10 years ago. So I like it from a personal investment perspective. And of course, the halving that's just of interest to the miners because they are getting paid half for mining new blocks. But it means that fewer and fewer new coins will be available. And as you might know, there can only be 21 million Bitcoins be mined forever. And we already reached 20 million. So soon new Bitcoins might get scarce. And now with the ETFs and the huge inflow of money, and don't forget, there's over 300,000 billion of money looking for a return or an investment. So some of it will go to crypto, some of it will go to Bitcoin, but more will go to gold and copper, because we need these hard assets. But from a personal portfolio perspective, I think you should have a bit of both.
No, I fully agree. It's like I'm not in the camp where it's either or. It's not black or white. For me, it can be both. But the question is, like, if it can be both for many other investors, like, how much is it taking away from either side, right? And in particular, coming from the gold space,
well,
how much is that taken away from it?
Most Bitcoin investors would never have bought a junior miner. And I think many junior miner investors are not that active into Bitcoin. So, and like I said, there's over 300,000 billion looking for returns. So there's enough money around there for both. These are very small markets still compared to what's invested into real estate or in the bond market. In the bond markets, there's over 100,000 billion invested into the bond market. And then look at silver. Silver, the total value of world silver production in a year is less than 40 billion, 40.
Willem, I have a question for you that I didn't know where to fit in earlier, but gold has been moving, but whenever gold even goes down $20, the mining stocks are completely getting obliterated. I see like a massive wave of red on my screen whenever that happens. And we're still trading at 23.25 here today. But whenever gold drops by $20, it feels like the mining stocks are losing 5%. Like, why is the mining sector so sensitive and still so negative? It seems like it doesn't believe in itself anymore. And like, I've been punched in the face a few times and punched in the mouth a few times as a mining stock investor. How do we get rid of that?
Well, I gave a few presentations this week, and I always show a graph that commodities have been in a downtrend compared to general assets like the Dow Jones for 45 years. This downtrend started in 1980. So it's not that's strange that after a downtrend of 45 years, people can't believe that a new bull market has just started. So a new bull market has to climb a wall of worry. And every time when there's a correction, everybody is afraid that will go down another 70 or 80% again. So we have to clear these weak hands first, and then you have to build the next phase of this new bull market of commodities, which will run for decades. And I'm glad to be on the record to say that here.
Now, it's interesting because I asked you earlier about whether you're writing checks. So it obviously sounds like you're standing on top of the wall of worry already. You've climbed it and you're sitting at the top. Like, how close are the other investors, like on that wall of worry? How high are they right now? Because it seems like they keep dropping whenever gold drops. They go back a few steps. It's one step forward, two steps back.
I don't know, but I gave a presentation this week in the northern part of the Netherlands. You know, these people are not well known for investing into mining. I think we had just over 20 people in that room. A quarter of them just signed up, and our minimum investment is 50K. So I'm surprised by the number of people, the percentage of people who understand the story. So there's new money coming in from people who have never invested into mining themselves. And we try to be an ambassador and explain this world and how great value can be found into mining now. And so we're not worried at all. And I don't care a bit about other investors who don't get it. You know, we need to make money for our investors. Has been a tough time. We started 15 years ago at the top of the last cycle. People working here around me only experienced the bear market. Most of them came in around 2011. They experienced 5 months of a bull market in 2016 and 6 months of a bull market in 2020. They think a bear market is normal in the world of mining and commodities. But don't forget, the shortages are starting to appear everywhere. We're entering the perfect storm for commodities. Shortages everywhere, commodities being weaponized, debasement of currency, higher inflation and interest rates. This is a perfect storm for commodities, and you can still buy it for pennies to the dollar.
No, fantastic closing words there, Willem. And I've been in the mining space since 2011, so I know exactly what you're talking about. And that's why it's like I'm also like maybe one of those skittish investors, like a bit nervous. Like, do I believe in the breakout yet? I'm getting there. I'm slowly getting there. But
but it's great to be a fund manager, because as a fund manager, you have this large pool of money. It's buy and hold, and that makes you quite relaxed. And when you're a private investor and you have all your savings or most of your savings in this small space, I understand that people get a bit nervous.
No, it's a big move, and you don't see the stocks moving, and they're still trailing. So you're wondering what is happening. What am I not seeing, right? And
20% up in our portfolio in the last 6 weeks. That's a nice uptrend. We don't worry. Just buy the dips.
Absolutely, Willem. Where can we follow your work? Where can we learn more?
Twitter. I'm quite active on Twitter, and of course at our website, cdfund.com, Commodity Discovery Fund. We have our Discovery Day, May 14th. I think you will be present as well as the MC. And you can download a copy of my book, The Big Reset, for free at our website.
Oh, phenomenal. Willem, I'm really looking forward to joining you in Amsterdam, May 14th. As you said, I'll be moderating and really looking forward to that. And in the meantime, everybody else, thank you so much for tuning in. I hope you found this interesting. It's a perfect combination of macro and micro, trying to understand where is gold coming from, where is it going to. Willem shared some of his price targets. And of course, we had to talk about the mining stocks, the micro. Why are they still lagging? And where is the opportunity? And according to Willem, we're just about to break out. His fund has seen some massive improvement already in performance. Plus 20% in 6 weeks is nothing to laugh at. It's a fantastic performance for a fund. And we'll be, covering a lot more of the mining stocks, mining stories. As I said, I'm currently in Arizona. I looked at 2 copper gold projects here, one of a VMS, one of a porphyry. So perfect time to look at some opportunities. And get ready for the big move up. Thank you so much for joining us here on Soar Financially. If you haven't done so, hit that subscribe button. It helps us out tremendously, bringing guests like Willem on the channel. And we always want to hear from you. Leave some feedback down below. Did we ask the right questions? Was this informative for you? We want to hear from you. Really appreciate it. Thank you so much for tuning in. We'll be back with lots more here on Soar Financially.